the end of the day, I think I agree with exactly what we just said. The Japanese are fighting a losing battle, and they might as well give up. There's no way that they're going to do anything to strengthen the yen, and it'll probably continue to weaken. At the end of the day, it's probably good news for some people because if you're shorting the yen, you're doing fine. But the other interesting thing about the yen and about Japan in general is that a lot of the Japanese investment money is finding its way into Southeast Asia and to emerging markets generally. And I think that's a very interesting development because they realize now that they have to make their mark, like China has been doing in these countries. And so the yen will be distributed widely in these emerging market countries.
Mark Mobius, we talk about how the weak yen is supporting the stocks. We're looking at a 50% upside in the last 12 months for Japanese stocks. I mean, how much more upside can be expected? I mean, the likes of Larry Fink says as long as the yen remains at about 150, we can expect Japanese stocks to continue to go upwards.
The trend is your friend. It will continue to move up, not because of the yen necessarily, but because of what's happening with Japanese industry and what's happening in the chip market. You know, the chip revolution globally is becoming more and more intense with more sophisticated chips being produced. And Japan is at the forefront of this development. So that is going to help them a lot. And you notice that in Korea, chip exports are really leading the export revolution that's taking place there.
Mark, as you say, Japan stocks, the trend is your friend. There's structural reform happening. Yes, they've come a long way over the last couple of years, but it's not like they're long-term expensive yet. It still seems like good investment. But they're probably unlikely to continue leading the kind of gains in Asia. Or do you think they can continue leading the gains? If you think it's somewhere else in Asia that can start kind of taking the forefront of gains, where is your pick of the other Asian equity markets?
The pick for me is India. India is the place, even though India has come back a lot and it has even at some point outperformed the US market, India has still got a long way to go. And by the way, Japan is going to play a role in India. As you know, relations between Japan and China have not been the best. China's been a big market for Japan, but they realize that this cannot continue. And they're beginning to make a big push into India, and that's going to boost not only Indian stocks, but also it's going to help the Japanese stocks as well, those who are going into India.
Mark, are you not concerned by just the extreme valuations we're getting on the India story? I understand the structural story. You've got incredible growth. You've got great demographics. Long term, it's brilliant. And I know you've been a long-term fan of it. And I know it's going to be there for some while. But the valuations in Indian stocks, they make US stocks seem discounted and cheap. And I kind of think that, you know, if you're looking to play, I'm not saying you want to fight that trend. And like you, you know, the trend is your friend. And I don't want to go against it. But I just don't see it where the most upside for the year ahead. There are a lot of other Asian stock markets, like Vietnam, like Hong Kong even, that just seem much more discounted compared to India. What would you say about that kind of rebuttal?
That's a very interesting point you make, because if you look at price-earnings ratios, yes, it looks cheap. If you look at the Hong Kong market or some of these other markets compared to India. But what we like to focus on is return on capital, return on assets. And if you look at the Indian companies in that regard, you find that they're doing exceptionally well. And what we found over the years is that companies with a high return on capital, high return on assets, tend to catch up on the PE level. In other words, the PE level is high at the time when you notice this high return on capital. But as you go forward, that PE level is going to come down as a result of this high return on capital, because the earnings are going to be growing faster than the price. So yes, this is one thing that a lot of people are afraid of, is the high level of the price earnings ratios, which makes India look expensive. But we look at it the other way. We look at, you know, what's going to happen down the road, and they're doing exceptionally well.
The thing is, Mark, the Indian market regulator is also seeing a bubble. In fact, it's been coming up in arms, trying to, moderate sentiment in the market. We've seen this before, and they say that they're seeing perhaps exuberance, particularly in mid and small caps. I mean, how are you assessing that?
Yeah, the Reserve Bank tends to be very, very conservative and concerned, which is why they probably will not reduce interest rates, because they don't want the economy to be overheated. And they see the stock market as booming a little bit too much. But as we've seen in the past, this kind of boom can last a lot longer than the central bank would like. And I think that's the case with India.
So, Mark, is it justified to take money out of India to go to China? We're seeing increasingly being done, and people say it is an inflection point, but from what you are suggesting, is not the right move.
Well, with China, I believe the place to look would be the government companies, because, as you know, Xi Jinping really wants to have the government companies dominate the Chinese market. So you might want to look there, but again, when you look at the metrics, when you look at return on capital and even some of the other valuation metrics, you'll find that it's not really that attractive. In other words, there are not that many bargains that you'd want to go into, not only because of the change in government policy, but because the economy has also been slowing. In the past, you could sort of throw money at anything and it would work, but nowadays you have to be a lot more selective. And for that reason, we're sort of watching it very, very carefully, and maybe picking one or two stocks that might be able to perform, particularly if they have government backing. And that is the important factor, I think, that you're seeing in China.
Mark, you made the point there that, in China investment for the last couple of years, stock selection has been so vital. Obviously, just investing in the indexes hasn't worked. It requires much more kind of active management. You talk about the government companies being much more supported, and that makes sense, and that's clearly been the trend recently. I'm curious about, the idea that the Chinese government say they're supporting a high-tech kind of moonshot and very, very aggressive kind of plans for the expansion of the tech sector, and whether you think there's kind of any merit of moving into some of those kind of slightly more kind of tech startups, the small cap tech, again in China, that's been so battered in recent years until the last couple of months. Do you think this is the start of a nascent recovery there, or is it another false dawn?
No, definitely. I think it's a good place to start for the reasons you mentioned. The government is pushing the tech sector, particularly the high tech sector, particularly semiconductors and companies that support the semiconductor industry. But interestingly enough, one way to get into this market, this Chinese market, is through Taiwan, because Taiwan is supplying a lot of the technology, even with the U.S. restrictions. Taiwan is supplying a lot of this software, particularly the so-called fabless companies in Taiwan. Yes, there's some companies like that in China, which you want to look at, but you might want to also look at Taiwan as an entry into that Chinese market.
Mark, which Chinese stocks would you buy? Some suggesting tech is the way to go right now, Alibaba, even Tencent.
Well, the one I would buy is TSMC in Taiwan Semiconductor. That's the one that's really the winner. And I think, of course, the Chinese would like to get their hands on TSMC, and they already benefit to some degree from products from TSMC, but of course the U.S. restrictions limit that. But that's the one I would bet on.
So no Chinese stocks? You will not be picking up any Chinese stocks?
Not at this stage.